Yeah, if that's the case, no problem. Obviously, they're in the audience, so that should be good as well.
Okay, cool. Let's get started. Hi, everyone. My name is Noah. Got Aki on the main Whalecoin Talk account. Before we get started talking about security and KYC, did you each want to introduce yourselves, give us a quick background of your career trajectory, how you got in the crypto industry, and all that good stuff?
Sure. You want me to kick it off, or who goes first?
Yeah, I was gonna say let us sure take the hot seat.
Okay, cool. Well, it's dangerous giving me a microphone. We might be here for the next 20 or 30 minutes, but I'll try to keep it brief. I'm Chapo. I'm the founder and CEO of Assure DeFi. Been in the space for a little over 6 years. Been everything from an investor to a consultant to a project leader to now a business leader. And originally got into the space back 2015. Actually, was bought Bitcoin for the first time in just because I wanted to gamble online, and I was a poker player, and I was struggling with getting money in and out of my bank account, and so I found Bitcoin, which was an option, and didn't really realize what I was using until 2016. And after I looked into it further, I realized what blockchain was and fell in love with it. And I've pretty much been obsessed since for the last 6+ years. So that's kind of how I got into crypto. But started investing in 2016, 2017, round tripped 7 figures. Seems to be a pretty common theme, so I don't feel too bad about it. But lots of lessons learned in losses and taking profits and gains and that sort of thing, and prepared me a little bit better for the next time around. But never lost interest in the space as a whole and my vision of where things will take us here over the course of the next decade plus, and how it'll change the world. And so as the next bull run came and we had DeFi summer of 2020, I was very active in the space as a marketer, a promoter, an influencer in the space, and got the opportunity to lead some projects in the DeFi world. I guess my claim to fame in the space is that I really brought the concept of reflections to the crypto space. And so tons of projects like SafeMoon and lots of other projects that exist today still use the concept of reflections, and a lot of bringing that technology or tokenomics model to DeFi was my doing back in 2020. So back then, there was tons of fraud, tons of scams, still a problem today. But when I got done leading Reflect Finance and dealing with reflections, I wanted to start a business that focused on fraud reduction. And at the time, almost everything focused around code and not around people. And in every project, there's really 2 aspects. There's the code and there's the people. And verifying both is important, but largely the human element and the people side of projects and the way that that contributes to fraud was being neglected at the time. And so I launched Assure DeFi back in first quarter of 2021. We were the first company in the world that was focused on crypto project founder verification, or project KYC. And I've spent the last 2 years working on bringing that concept to the crypto space, and trying to make project KYC or founder KYC a standard in the space, just like code auditing is viewed. And so that's me, and I'm happy to be here. I appreciate you guys hosting, and I'm looking forward to a good discussion with Obsidian Council and some other people here who have kind of grabbed the bull by the horns and are doing some of the same good stuff for the good of the space. So thanks for having me.
That was awesome.
Can you guys hear me?
Yes, we can.
Awesome. Okay, my name is Jesse. I am a YouTube creator, investor. I have also been around since about 2017. And I did about the same thing where I invested, I made a lot of money, and then I lost all of that money I made. And so I'm with you there, El Chapo, on
A fellow round tripper. I
yes,
love it.
yes.
Welcome to the party, buddy.
I know it was brutal, but it was a huge learning opportunity. And I tell a lot of people, because there's a lot of new people that got invested into crypto this cycle, and they lost a lot of money too. And you almost got to go through a cycle like that in order to understand what you're doing and understand how the cycle works, so that next time around you can make money. Because a lot of people get caught off guard with how quick it goes up and how quick it goes down. So yeah, same kind of thing. The next cycle that came around, this bull run, I was able to learn my lessons, and it kind of corresponded with a time in my life where when COVID hit and we had the lockdowns, I was actually a wedding videographer. So I invested as like a part-time hobby, but I was kind of an idiot when it came to investing. And my full-time job was filming weddings, like high-end luxury weddings in the Bay Area. And so when COVID lockdowns hit, I had this business. It was like, for me, I felt like I was making a lot of money. I was making six figures a year. I have five kids. It was awesome. And then, like, pretty much overnight, my entire income dried up to zero. And I went on unemployment. I didn't know what I was going to do. I'd spent 5 years building a business that just crumbled in a matter of weeks. And so I started this journey of like trying to do something. I had to feed my family. And I started documenting my journey on TikTok first, and then YouTube. And originally started with side hustles, and then worked my way back into investing once I had capital, because I knew I wanted to get back into crypto. Just knowing that, just the wealth building potential. And I felt like I had a leg up because I'd been through a cycle. And so once I'd built up about $100,000 doing side hustles, I jumped into crypto, was able to take that to over $1 million. And yeah, it was like my journey was like 1 to 1 million. And then along the way, got rugged a couple times, and was very frustrated by how much fraud was in the space, and just how many of these projects got away with it. It was more like it was almost like anger of like, man, like they shouldn't be able to do this. They shouldn't be able to get away with this. And so we decided to kind of go down a similar path, and got to give a lot of credit to El Chapo, because it is a fundamental need in the space. He's right. Like, it is something that we need. It needs to be like on par with like a code audit, because yeah, you could have perfectly audited code, and then one developer steals all the funds, one founder steals all the funds. It's kind of absurd that it isn't on par with that. And so we wanted to also just kind of improve the space where we could. I think what you'll find is a lot of people on the stage have this passion to make crypto better, especially right now in the depths of the bear market. I think we all just want to build and make something better. And so that was our journey. We don't really know quite where it's going to lead, or where it's going to go, but like our end all be all isn't necessarily just KYC or just that, but how can we make the space better, even if that is like at the end of the day creating a system that cuts us out of it, but overall makes the system, or makes the crypto space better.
Beautifully said. My name's Matthew. Pleasure to be here. Stoked to get the invite. I am one of the co-founders of Obsidian alongside Jesse. My background was a little bit different. I didn't come into the crypto space and the Web3 space as an investor necessarily. Like, I guess I was investing, but really the reason I got in was for the people. I resonate with something that you said earlier, El Chapo, that for you it was you saw this need where everyone was focused on code while not paying attention to the people. And I think it's really easy in an industry that is moving so quickly and developing so quickly to just focus on the data, or to just focus on the technology. And I'm the kind of person that I want to focus on people. And so when I partnered up with Jesse, it was more from the perspective of like, dude, we're seeing this new industry develop, where the reality is, I think the most driven people are going to be showing up in Web3. I think the most interesting people are going to be showing up in Web3. I think the most successful people are going to be showing up in Web3. And I want to be in that room. Like, if nothing else, I want to be in the room
where everyone who is trying to dominate life is showing up and working together. And so I did have a business background. I was an entrepreneur before. I had just sold my previous company, kind of similar to Jesse's story there of exiting one company and looking for what's next. And so I decided on Web3, not necessarily because of how amazing it was. And I actually didn't fall in love with it until working in the industry. It was more so, I just figured the people in Web3 are going to be really awesome. And so I want to be in that room. And so I got started with Obsidian more so as building a community and finding a way to, back to that idea of like, how can I get the most awesome people in the same room? And then what can we build? And from there, once the Obsidian community was formed, that's where we started asking questions of like, okay, like we're all here now. What can we do to improve the space? Because if you get excellent people together, the natural thing that needs to be done is then make whatever we're doing excellent. And getting rugged over and over again was one of the early problems that we were frustrated by. And so that was essentially think tanked of like, okay, like instead of us just getting rugged, why don't we just KYC the companies that are interesting to us? So we stopped getting rugged. Like it would be sweet if we knew that one of these cool ideas that we're all throwing money into isn't going to run away with our money. And so that was like the birth of our KYC, was really like on a communal basis. And from there, it's been like, I don't know, we're at 15 months or so of building and evolving. We've gone a lot further than just KYC. That's still a core component of who we are at Obsidian, but a lot of it comes down to like, I'm really interested in the teams behind projects. I'm really interested in seeing the type of people that are creating things. I'm just really interested in seeing Web3 as a whole and the entire crypto space improve and become what it has the capacity to become. And so everything that we touch, that's like our end goal, and my end goal is how can we make Web3 better than it was yesterday? And sometimes that's KYC, sometimes that's community, sometimes that's some of the other stuff we do. Yeah.
Awesome, Matt. I'm Taylor. I've been in this space. Well, geez, I've known about crypto almost my entire life. I've got that classic story of having a friend that was really nerdy in middle school, and we'd play video games together. And he approached me about Bitcoin when I was too young to really understand what that meant. And he's now way tanner than I am, way more buff, and a lot cooler for sure. And I'm the nerdy one now, trying to play catch up with him because he spent a bunch of time when Bitcoin was still very early on. So I've always had an interest in the crypto space, but up until 2021, I was more of a spectator than anything else. Actually, a huge fan of Jesse originally. I watched him on YouTube, specifically for his entrepreneurial 1 to 1 million journey, which I was on myself. My background is actually, of all things, in door-to-door sales, door-to-door pest control. I've sold pest control door-to-door around the country in the U.S. and other things. And so communication's always been a very interesting thing for me. Sales, the idea of selling, what it actually means. And so those sales skills came into play when I sent Jesse a message on Facebook Messenger back in November of 2021. And to my surprise, he actually responded to me, and that's how we began a relationship ahead of the Obsidian brand forming. Originally, it was called the Obsidian Council because it was a group and a community, and from there, it's blossomed into what it is now organically. But I would describe myself, as far as my relationship with Matthew and Jesse goes, they are big idea guys. They love to talk about solving problems in the ways, unique ways that we can add value to the Web3 space and assist. And I've come to be moldable as far as my skill set goes, and I've been working. I work constantly to bring those visions and those ideas into reality. And so that the original vision that I worked on was our KYC program, verified by Obsidian, actually making that a reality. And then from there, we've branched out and we've offered several more services, all based off of the original foundation of KYC. One is Enterprise by Obsidian, which is essentially KYC as a service for launch pads and other one-off KYC jobs for security purposes. We have a Web3 Talent by Obsidian service, which is we KYC all of our talent ahead of signing them onto our talent pool to ensure that we can have the highest level of trust for the individuals that we aim to place for a project or an individual looking to build in the Web3 space. And then we also, I've also worked heavily on our investigations by Obsidian team, which truly is, and we'll be talking about this today, the backbone of having an effective KYC. It's a huge part of actually holding people accountable. So that's a little bit about me and us here at Obsidian.
Cool. Thank you, everyone, for the intros. And obviously, the space is titled Security and KYC. And KYC has been mentioned several times as you guys have been talking through the course of the broadcast so far. If I had to kickstart this conversation, I would ask, well, I'm going to ask, what are your thoughts on KYC as it currently is in the broader crypto industry? How are you guys doing it differently? And also, what are some, let's see, what are some cases where you see KYC processes and you're like, well, that doesn't really add any value or add any assurance or security to a project? I'd love to hear some insight on that. I mean, I personally have seen some KYC processes that are ridiculous, but I would love to hear it from you guys. And this is kind of an open panel. Feel free to, we don't have that many people up here, so feel free to just uncue your mic and go in.
I'll jump in and start here. I think, it's important to understand that all KYC is not the same. So, the panel here, we focus on KYC. So we say that, but obviously this isn't something that everyone else here is day in, day out doing and probably understands. So to give people some background here, KYC is something that's been around for a very long time. So Assure DeFi didn't invent KYC. KYC has been used in the banking industry for a long time. It stands for Know Your Customer. It's a compliance requirement that's focused around making sure that you know who you're doing business with. And the KYC process, most people have gone through it at some point. When you sign up for a new financial account, you have to, give them your identity info and maybe snap a picture of your driver's license or passport and then take a selfie. There's a lot of kind of software-based systems that do it these days. KYC here in the crypto space, and the way most people have been familiar with it up until the last couple of years, has been for investors and for compliant, launches and investments. Or if you need to register on a centralized exchange, you've got to go through that process because it's a legal requirement. This concept of founder KYC and verifying leadership for crypto projects for the purposes of fraud reduction is something very different than that. And this whole concept, as I said, when we brought this to this space in early 2021, it really started in 2020 when and I think going back to the history of it's important here before we get into the conversation. Back in early 2020, it was Uniswap summer that was coming, and fraud and scams were everywhere. There wasn't really formalized launch pads yet. It was if you think it's the Wild West now, it was really bad back then. It was like, send your ETH to this, you were in a Telegram group, send your ETH to this Telegram or this address, and you just hoped that the Telegram group wouldn't just be deleted and that somebody would add liquidity somewhere, somebody would send you tokens. I mean, there was like no protection at all. And I was getting about 10 or 15 requests per day at the time from projects who wanted me to work with them from an advisory capacity, a marketing consultation, promotion, shilling, whatever it might be. I had so many projects pinging me every day. I had no idea how to really weed out who I wanted to work with and who I didn't. And I knew 8 out of 10 of them were scams, but trying to figure out and differentiate between what's a scam and what's not is very difficult. So there's no way you can do due diligence, yourself on 100, 150 projects a week. And so I started asking people and responding with a canned message for them to jump on a video call with me and give me their identity details. And if they were willing to do that, then I'd consider working with them. It worked pretty well. Only about 2 in 10, maybe I got down to about 2 a day that said, sure, I'd be happy to jump on a call and give you that. No problem. I'm legit. I've got no problem giving you my identity, which made it a lot more reasonable for me. So what I was doing, to give you an idea, is I was hopping on a Zoom call, and somebody in Thailand, Pakistan, Africa, South America, Australia, somewhere around the world was flashing an ID that I personally had never seen before. I was taking a screenshot of it and I was saving it on my desktop.
That's amazing.
That was the alpha of KYC. There it is, right there. And that's how it really became. That's what led to where we are today. But the truth is, it was still better than nothing, right? It served its purpose for me. I wasn't charging for it at the time. But what I found was that there was value in it, and investors saw value in it, because project owners who I was doing that for started telling their investors, well, I got on a call with Chapo. I even gave him my ID. And investors started asking me, did he do that? And investors wanted to know whether that happened. And that's when the light bulb went off, that there was this two-sided value equation where project owners wanted that credibility. Investors sort of cared about whether they had gone through a process like that. And I was sitting here thinking to myself, boy, this is not being done right, though. I have no idea whether that's a real ID or not. I don't know what a Pakistani ID looks like. And I certainly shouldn't be saving sensitive personal IDs on my desktop. And somebody should really do this right one day. And a year later, I was finally in a place where I had the time to start a business. And I was surprised that nobody had actually done it yet. And so when you think about that process, where it came from to where we are today, there's a huge continuum on what KYC means and what that verification process actually is, how well people do it, how people store data, what you do with the data, how it's displayed publicly. KYC is it's a complicated process when you do it for the purposes of fraud reduction and not just a check the box compliance type of thing. And so I think the biggest thing that we're here to talk about today is how some KYC processes may look exactly like mine used to back in 2020 still. And some KYC providers who say, yes, we've KYC'd somebody, may be taking a snapshot of somebody's ID and saving it on their desktop and putting a badge to them and saying they've been KYC'd. And that's very different than what Obsidian Council does, what Assure DeFi does, and some of the legitimate providers in the space. And so I just wanted to give that segue before we get into the real weeds here, and maybe let Obsidian chat for a little while, because the background, I think, is important.
Yeah,
totally.
I was going to say, so I totally agree that not all KYC is created equal, and that there are a lot of KYC companies out there, and this is something we notice. Assure isn't like this. There's a couple that really hold a high standard because they want to actually improve the space. But what the vast majority do is they'll go out and they'll KYC one founder or one project person. And what we found is that if you, because that's how, and we actually started out that same way, where we would KYC one person because what we saw is most people did that. And what we found is not only was that completely ineffective, because you can KYC one person and then another person from the team steals the funds and then you can't hold them accountable. But two, a lot of these projects were doing these really complicated scams where they would essentially hire a person from their community and give them hey, you're going to get equity or some sort of tokens from this, and you're going to be on our project team as this fake made up position, and you're going to be the one that KYCs for us. And so they would have this person, and we encountered this issue where the team rugged, and we're okay, well, what are the identities of your other team members? And the person's like, I don't know. I've never met them. They hired me to do the KYC. And we were like, what? And so what we found is it's completely ineffective to KYC or to do KYC unless you're KYCing everyone that either has access to the contracts or the multi-sig mostly. There are some cases where with the multi-sig, it might be, it might be acceptable to have an extra team member. Like a lot of these big multi-sigs will have, somebody from Polygon signs or a founder from that. But in general, you want to have everyone KYC'd, or else it only takes one team member to steal the funds, and then everything's gone. And then the second component that's incredibly important is, okay, let's say you KYC everyone on the team that's relevant, right? Every relevant team member that could steal funds. Well, and let's say they steal the funds. Well, if you can't enforce them committing that crime, if you can't actually come after them in any meaningful way, then you're kind of still stuck in the mud because there's no accountability to hold them accountable. So I know Assure already has this as well, where they actually go and hold these teams accountable if they go and rug, because the point of a KYC is like, hey, not that they can't rug, it's that if they do rug, they will be held accountable. And so I know Assure has built out a lot of connections with law enforcement and different agencies or groups to be able to hold them accountable. That's something we've found that we've had to do as well in order to hold them accountable. And so really, when you're looking for a KYC program, you have to have those two things: the ability to hold the identities of every relevant team member, and the ability to enforce any action against them if they commit a crime. And I would say maybe a third one would be some sort of ability to track the on-chain analytics, like either a team member or some sort of connection to track those, so you can see where the tokens go. And because a lot of times you can, like if they go to an exchange, you can actually, if you have a relationship with the exchange, freeze the funds so that they don't get like thrown into Tornado Cash or something like that. So I would say those are the big things you kind of have to have for currently for any sort of for KYC to be meaningful. And if you're looking at a project and they're KYC'd, that's the first thing I would do. Is I wouldn't just say, oh, I accept this KYC. I would go and either try to contact the KYC company or look into what they do to make sure that they're doing those things, because otherwise it's irrelevant.
Those are all really good points. It's interesting, we have this whole aspect of KYC is it's new. There's a huge gray area, and that concept of or question about who you KYC and who should be KYC'd is really an interesting one. And different providers have different policies. Our policy has changed over time. It sounds like similar to yours has. And you make a great point. It's challenging because if you KYC one person, that's better than not having anybody KYC'd on the project. But at the end of the day, if the project rugs and you KYC'd the CEO and it was the dev who rugged the project, then you still really don't have any accountability and there's nothing you can do about it. So you make a great point. Our policy is different than it sounds like what yours is, and that's okay. I mean, part of this whole roundtable, I think, and the value of having this discussion, which I think is really cool, is that we have two companies here who are joining forces, even though we're really competitors in the same space in a lot of respects. We both want what's best for the space, and we're both trying to figure it out together. And what makes the most sense, and what are the best practices for the good of the community and for crypto in general. And I think it's really cool. It's something that we don't see a whole lot in this space. People coming together and trying to figure it all out. When you do compete, but our policy is different there. We started out saying we just need one person on the team at least, and we ran into the same thing, right? So the challenge that I think you always have with these projects is you don't really know whoever has access unless there's a defined multi-sig and you've been able to go through each address and do address confirmation and have like a true verified multi-sig with individuals in with each account ownership. It's still very tough to know who actually is on a team, what roles that they have within the team, who owns private keys, because I could give somebody a private key directly after they verify. And there's so many different unique situations. It makes it very difficult to ensure that you have all the bases covered. Um, and there's some situations where not everybody on a team needs to verify. And there's also situations where some people on a team may be willing to verify, others aren't for one reason or another. And it still is better for investors to have some level or partial verification. It's sort of like, do you want no code audit or do you want a cheap code audit? I'd rather the cheap code audit than none, but the best is to have a complete and good one. So we've really gone back and forth with a lot of policy questions like that. And it's interesting because even the strong and solid providers in this space still handle things, sometimes slightly differently. And that's okay. But it's great to hear different perspectives. And that's certainly one of the aspects that I would agree with. Some of the cheaper providers say, come on down as long as one person, maybe if it's even a community mod, right? Like it's a mod or an admin of the community chat. He's willing to KYC on behalf of the project. So that's cool. Now the project is KYC'd.
Yeah,
Crazy,
yeah,
right?
I agree. So I was going to ask, would you think in that situation that it might actually make sense to have, and I don't know, I don't know if you guys do or don't, but it might actually make sense to have like almost degrees of verification of like, hey, like different tiers to communicate that effectively to the community to say, hey, this project is KYC'd on this level, which is like, there is this level of risk with that. And this one, though, they've done the whole team. Like they are like the highest standard of KYC. And my
Yep.
thought process behind that is, I'm with you that I actually agree that the KYC space needs to be, at least in the current format. Ideally, actually, I think it'd be best if there was no, if we didn't have to be involved. If we could do this all with code, that would be the most ideal situation. Currently, that's not possible. So outside of that, I think that we do need to have some sort of process, especially for the good of crypto, because crypto can't keep existing as this massive scam space. And so, in order to better crypto, we got to have some sort of like standard of KYC. But in order for KYC to be the standard, we got to have it be effective and people not, looking at it and be like, hey, it doesn't work. Because I've heard people say that, and I'm like, no, some KYC doesn't work. But KYC in general, just like you said, it is definitely, you're right, better to have one person than nobody. And then there's different degrees, and we're working our way towards. It's a new thing, like it's a brand new thing. We're
Yep.
working our way towards better. But would you think that maybe some sort of like tiered system or something might be an effective idea?
Well, look, I think our policy is the best one. Otherwise, I would have changed it, right? But what we do sort of have a tiered system. It's maybe not defined quite that way, but what we do now is we show on the NFTs that we produce, we show publicly and pretty clearly how many people have gone through the KYC process and which individuals on the team have been verified along with which roles have been they take in the team. So CEO, CFO, marketing leader, whatever it might be. We clearly show who's gone through the verification process as well as what they have control over when it comes to funds, contract, or liquidity. So it's transparent. We don't just like when we first launched, we were like most of the cheap ones now. It's like it's one stamp fits all. Are they KYC'd or not? And that certainly doesn't make sense. I mean, that was one of the big learning lessons that we had last year or 2021 now. So I think the important thing is whether you look at a tiered system of some sort, or you just, I'll say, give everybody the transparent data dump on who you're actually verifying so that investors have the information. Either way, there's certainly different levels of it. And, we try to do that through stars on our KYC. It's just every project's very different. Some of them, there's really only one guy who's important, who has control of everything. And so it's one person, but that's really all that needs verified for that particular project. Others, it gets pretty complex. There's multi-sigs, there's people who handle funds, there could be a development team that has access. And so you may verify the lead developer, but does that mean another developer doesn't potentially have private keys and access to the code? You can see it can get pretty complex quickly. And so to say that you have verified the entire team, I think is almost a statement that you can't really even ever guarantee. But that's why we moved to a model where we just specifically show who we have verified, and then investors can interpret that with what degree of safety they feel because of, what's been verified and what hasn't.
Well, that's
Yeah. Oh, sorry,
Jesse. Do you
Taylor.
mind if I pitch in here?
Yeah, for sure.
So I find that interesting because it sounds to me very similar to the smart contract audit approach, as far as I perceive it. When it comes to, okay, let's use CertiK as an example. Okay, this project's been audited by CertiK, and then CertiK is releasing a report that details the specifics of the work that they've done. And if you are an individual that is willing to dive into that, you'll understand what that stamp actually means. So that's a very interesting approach that is, in my opinion, already used, but you're applying that to KYC, which I think is pretty cool.
I think that almost has to be how it is, though, Taylor, right? Like, I mean, when you think about it, audits don't prevent rugs. Audits don't prevent hacks. Audits identify potential issues and they provide more information. And most code that gets exploited, hacked, or rugged has all been audited these days.
Right.
So that's why I always laugh a little bit, because I do think that KYC and audits, it's the best parallel. Auditors verify code, we verify people.
Right.
And neither one of them prevent bad things from happening. And so when people say KYC doesn't work, I always sort of chuckle and I'm like, just like audits don't work, right?
Yeah.
And they're like, well, what do you mean? Of course they work. It's like, no, go look at all the hacks. You think those bridges that got hacked weren't audited? You're crazy. You think all these projects that are getting rugged aren't audited? No, you're nuts. But audits still have value, just like KYC done right has value.
Right.
But it's not a be all end all solution, right? It's just helping provide that environment. And the way I see it is more information, the better. And it is still something that when you say it's been audited, you have to go look at the report to find out, yes, it might have been audited, but there still may be high risks involved, right?
Right.
And you sort of have to look into the KYC the same way. So it is a good parallel.
Right. What I was going to mention too about the way that we've approached this problem, because I've thought a lot about this myself. When I've spoken with you in the past, Chapo, it's been interesting to see how these are very similar issues that when you're looking to create the best KYC service that you can think of, as far as protecting communities or individuals from getting their money stolen from individuals that have bad intentions, you run across questions like, do we KYC high volume? Do we try and make accommodations for people that don't want to give us their information and then take information from others? Or are we super strict, and do we set a one size fits all policy that is required in order to get our stamp? And so we hit that fork in the road early on, and we had tons of debate about it internally as far as what we should do. And we actually went to the other side. And by the other side, what I mean is, for us, we require the parties we've identified have the capacity to steal, right? Not necessarily will, but they have the potential to do so if they had those intentions, are those that have access to the funds in one way or another. So more often than not, that's individuals on the multi-sig, or the individual that holds the private keys to the treasury wherever the funds are held, and then the individuals that actually build the treasuries, right? Or in other words, the smart contract developers, because we've also seen ways for those individuals to implement backdoors or other various ways to steal funds that would allow them to do so. And so for us, we've, from the beginning, not only do we require that all multi-signature wallet holders and smart contract developers go through that, so that we don't have to be concerned about any one individual going rogue and using the rest of the team as fall guys, but we also do screening calls ahead of even beginning that process, so that we can understand if we are wanting to work with them as far as KYC goes. It's almost a preliminary verification ahead of putting them through the process. So different paths, but both effective, in my opinion.
Yeah, I was gonna say, I think what I was getting at with, um, my belief is I think the general market doesn't read through auditing, the final audit. They just look at the stamp of approval from CertIC and they say, oh, it's good. And even if they do read through it, they often don't even understand what they're reading. And I think as an industry for crypto, we do need to kind of make things more intuitive so that grandma can understand it and grandma knows. You know what I mean? Like, there's going to be a lot of people that are going to jump in, and any way that we can push it forward, I think is important. So what I was getting at with the tiers, you said you have stars, so that's like, that probably fills the same role. Is that just in general, anything that we can do to make it more intuitive so that just the average person who is, they are kind of lazy, and we have to just understand that and really understand that, like, we're the ones that are responsible for making things better and better so that they achieve their purpose better. We want to make it so that they can understand. So if it's stars, like, this is a 5-star project. They are, we believe that they're the full, as safe as our current standards allow for. Or this is a 1-star, like they only had one member. It's better than nothing, but use at your own risk kind of thing. And when I was saying to KYC every team member, it was every relevant team member. So if there's like a marketing officer, obviously there's no point in KYCing them because they have no ability to steal funds. Or if it's the guy that's in charge of their email campaign or whatever. It's more trying the best, and I don't think we figured it out fully or have even a perfect solution at all, but just more moving towards how can we figure out how to make the industry better by identifying any weak point possible and then fixing that solution over time. And I hope that, like, all of our KYC programs are significantly better a year from now, and 2 years from now, 3 years from now, and we find ways to fix these issues.
I think they will be.
Yeah.
I mean, just look at the growth rate. I have to always remind people when we talk about this subject that this was mid end of 2020. We're talking about 2.5 years ago. That was when this was the alpha version, when I was asking people to hop on a Zoom call. And this business that I launched in early 2021, I spent most of 2021 educating people about why this matters and how crazy it is that we're giving money to people named Tiger Boy 842, and
Oh
they're
my
running
gosh,
away with
yes.
millions of dollars, and then everybody's surprised, right? So it's like, this industry, when I talk about this KYC industry for the purpose of fraud reduction, it really didn't catch traction until fourth quarter of 2021, which means that we are a whopping 15 months roughly into a brand new industry. So I think we have to be a little bit patient with ourselves in the maturation of the industry and figuring it out and navigating these nuances in a space that changes very quickly and all that kind of stuff. I think we're going to be in a lot better place a year from now, and we are in a lot better place than we were a year ago. It's definitely stronger. The one comment that I'd make is it's always interesting when you make these choices. Like, the initial thing says we should verify it as deeply as possible. We should verify every single team member. There is a balance, though. Like, it's just like when you talk about code audits. Should every code audit be manually reviewed line by line with somebody with a certification? Well, that sounds like logical thing. Of course it should be. Well, but you have to always balance cost, and there's a reason for that. It's because if you make something that is higher cost, it means that a much smaller percentage of projects will do it. And as I said, even with a poor verification or a poor code audit is better than none. And so you kind of, as an industry, we all want things to get better, right? There is this piece of it which says that we want a higher percentage. Everybody here wants a higher percentage of projects to be verified. And that can't happen if it's so robust and it's so in-depth and it's so costly to manage the program that it's thousands and thousands of dollars to verify, because it's cost prohibitive for the majority of these small projects that are launching, which is where we see the bulk of the fraud issues. So it is a balance, and it's not, there's no perfect answer. But that's why there will probably be a market, just like there is for auditing. there will probably always be a market for I'll say the lower cost end, and there will be a more robust, higher cost end also. And again, it's why there's a big parallel between what we do and what auditors do. The goal there, just like auditing, is how can you offer something that is still robust and still has value and is as deep as possible at a price point, and with a cost structure that makes it viable for high volume. That's a challenge that we're trying actively right now to solve.
Yeah.
Agreed.
So we've talked about the different kind of tiers and like how good a KYC is, or rather how in depth the KYC process is, and having the KYC an entire team if that team has access to funds. But does the location of the team matter when KYCing? Is that something that you guys consider when giving a rating? So if it's in a country, let's say the team is located in a country where even if they were hypothetically rug, there's no infrastructure, or rather there's no one to really go after the individuals. They can kind of disappear. Is that something you guys look at?
I can speak to what we do. When we launched our V2, which was in April of 2022, we developed a proprietary country rating system. It's a 3-tier system based on a number of factors from the world justice. And it was about corruption, law enforcement capabilities, and there's about 9 factors we used in creating this proprietary country tier system, which was speaking exactly to that issue. It was all about what are the chances that if fraud occurs and you do everything right with respect to evidence gathering and reporting, that you will actually be able to drive real law enforcement action in that country. Because the answer is obviously somebody in a country like Nigeria or Central Africa, in that area of the world, without strong law enforcement when it comes to digital asset crime like this. The truth is that even if we do our jobs right, we can't drive law enforcement action, or it's going to be very difficult. Whereas that's a very different story in the United States where I live, or in a lot of the other first world countries around the world that have strong law enforcement. And I think it's very important that investors know that, and they can assign their own risk. I mean, this is the Web3 space, so we do business with countries all over the world. But I think it's only fair to investors that they really can assign some value to what recourse could potentially be there. We also wanted to not display what countries they actually are, because that can inspire bias and racism, by people potentially not investing because developers or leaders are from a particular area of the world or a country. And that's very anti-Web3. And so we wanted to keep the actual specific countries hidden while giving investors the information that they need and being able to interpret the risk. And so that's why we assign a tiered rating system. And so when we do our KYCs, you'll see that on the NFTs themselves. You'll also see for each individual person who went through the verification what country tier has been assigned to them based on where they're from.
And I was going to say, we do something similar where we won't work with a project where the majority of their members, or sometimes even where one of their members is in a place that we don't have the ability to spur any sort of enforcement action. And a big reasoning behind it is because if you think about like a crypto project, it's actually a really great tool for terrorism, crime, and all kinds of like just really horrible stuff. Think about it from their standpoint. Like, you get a really cheap developer to spin up a project, build a bunch of hype on it, and then rug people over and over and over again. And there were a lot of groups that did this during the last crypto bull run. And so what happens when crypto starts like heavily funding terrorism and these horrible things? What do you think the governments of the world are going to do? Like that's what catches their attention more than anything. When you look at Tornado Cash and how everything that went down with that, where it got banned, that had to do mostly with just the fact that it was funding North Korea. They didn't really care about, like, everyone's like, oh, they're coming after privacy. They don't like privacy. But it really wasn't about that. It was about the fact that North Korea was using it so heavily, that's what gets on the radar and gets their attention. And so we have to do everything in our power to stop that. And this is really, at the end of the day, why I'm such a big believer in KYC and why it has to, for crypto to survive and thrive, KYC has to be a standard in the industry, because we cannot be funding terrorist groups. We have to solve this problem. And like I said, I am all for it. Like, I would love to have Obsidian go out of business because we figure out some sort of on-chain reputational system with maybe soulbound tokens or just on-chain identity that fixes this whole issue. That would be amazing. Whatever it is, as an industry, we have to figure this out. And the only solution we have right now is this more type of manual KYC that you're seeing. And we have to, as an industry, rally behind anyone that's higher quality and support them. And that's why, for me, like, I would love to see Assure. They might be some sort of competition, but they're not really, because we're fighting for the same goal. I would love to see them turn into a $10 billion company, put us out of business, and change the space, because that's what's best for crypto. And I think a lot of us here are crypto natives, and we want to see what's best. And so, I don't know. Maybe this is more of a rallying cry for anyone in crypto and anyone listening, that, like, we need to make this a standard. We need to fix this, and this is the way forward for crypto, because the more we can eliminate scams, hacks, and all of that kind of stuff, the more as an industry we can really stand up and say, hey, we're doing something that's important.
Well, go into that real quick. I agree with you 100%. This was originally a personal thing, then it turned into an altruistic thing. And although it is a business, I mean, we have to have a business to continue to do this and drive the idea forward. There's definitely an altruistic vision here of doing something that is good for the space, and we need this. And if it doesn't change, the space won't be able to continue to grow. This is really what regulators want to see, but people don't want outside regulation. So we have to be able to control things ourselves and keep it in check. And this is certainly something that can really help us toward that goal. The way that it's going to happen, though, is not Obsidian Council and Assure DeFi sitting up here and banging a drum to project leaders and telling them that they should do this. That's never going to work. It's only going to really change when investors start demanding it, because they understand it, they realize what it is. And at the end of the day, investors are like stockholders. They're or shareholders. The management has to respond to their requests. If they're not going to give them money, if investors are not going to invest without it, then they'll do it because it'll be worth it, because there'll be a return. And that's, I saw, and some of you guys on the panel sound like you've been in this space long enough. This is exactly how code audits were. When I first got into space in 2015, 2016, code audits weren't an expectation. They were like a nicety, just like KYC is today. It's something extra you can do, but at the end of the day, developers and investors were all but responsible for reviewing code themselves. And I saw this rise of code audits where first they were an option, then it was basically everybody in the Telegram chats and in the communities were like, when audit, when audit, when audit. I'm not going to invest until the audit. And they were holding back their funds until the code was audited, and they could guarantee that there wasn't honeypot, stuff in there. There wasn't exploitable code. And so when everybody asks for something because it's important to the people who are funding the project, it becomes a priority. And until that really happens in the space where people understand the value of KYC and why it helps protect them and start demanding it, because it doesn't make sense to invest in unverified projects. And people start realizing that this helps them be more successful. Ever since I've stopped investing in unverified projects, you've made a lot more money because you stopped getting rugged. It's like when people get to that point, that's when this concept will really become more of a standard in a space like code auditing has become. And I do think that we're going to get there. But, the people on this and listening to the spaces right now, you're part of that. It's not just the companies. It's really what you demand of the projects.
Well said.
Well, I was gonna add to that. But I do believe, though, that I know it has been said, like, to a degree, like, as a KYC company, we can't stop a project from rugging. But at the same time, we almost kind of have to figure out a way to make it far less likely for when a project's KYC, because the only way I see investors adopting it is if you can with a certainty say that because this project has been KYC'd by this company, there is a less likelihood chance that it rugs, and I can see the data and it shows that. And so figuring out like even something, I don't know that I have the exact solution, but figuring out a way to make sure that happens. And I think some of it does come from just being able to hold teams accountable. People see that and they're like, hey, if I rug, I'm going to get in trouble. But as an industry, we do need to work more towards that and figuring out solutions to stop the rug from even happening in the first place, so that we don't have to ever hold anyone accountable because they're not rugging. When they do KYC, it's essentially the same thing as being doxxed. Something we have noticed, and something that a lot of people don't realize, is a lot of doxed projects are scams. Not a lot, okay, but some doxed projects are scams. And what I mean by this is there is this really great scam that fools a lot of people, where a project will be doxed. They'll have these super professional photos on their website, they'll link to a LinkedIn profile, and it is so easy to just grab someone else's LinkedIn profile picture, create a fake profile, and post them on the website. And I don't know why nobody points this out a lot, but just because a project's docs does not mean that they are safe or even real people. Especially today, you can whip up
Great point.
fake people with AI that it looks real, but it's not real from there either. So really, even a docs project, like we've actually had docs projects do KYC to confirm they are the person that they say they are, and it's like a cheaper version of that. And you guys are welcome to steal that and add that to your collection too, because I also believe that that's important, that even docs projects should on some level be verifying that they are who they say they are.
I've told people that actually, when you look at the different degrees, being totally anonymous is sort of the worst. Being doxed is, and not verified, is the second worst, but being verified is better than being doxed. And I can get on a video call, even show my face, even if it wasn't doctored, and say, I'm Satoshi Nakamoto. And then I can go create a LinkedIn profile that says I'm Satoshi Nakamoto. And guess what? I'm still not Satoshi. And if I rug, you're still going to have no recourse. You're still going to have no advocates. You still don't have connections with law enforcement. Nobody's going to put together the evidence package. And you're going to be right back to where you started.
Exactly.
So that's why docs people are rugging, right? You don't have any advocates on the back end. You still haven't verified that that's actually a person. So of course it's better than being anonymous, totally, but not that much better. And I think a lot of people think that this is just for anonymous projects, and it's a great point. This concept of verification applies everywhere. There needs to be accountability in the space, and it's even more than just the verification. In my mind, the biggest benefit isn't really just the verification of who people are. It's that back end advocacy when something goes wrong. In this space, everybody here has probably been scammed or rugged. And most of the time, 99% of the time, when you get rugged, I was in the same boat. It's what really sparked, by the way, I don't know if I mentioned this, but I got rugged for over 6 figures in one crack. And that's when I sat down, and the next day I launched Assure DeFi. And I started the business because I was done with it. And I looked around and I said, nobody's here to help me. Law enforcement isn't here. There's no business here that's stepping in saying, we're about to go to bat for you and help with fund recovery. I didn't have a single individual that I could go to and turn to who was going to actually help me. I didn't know what to do. I was totally lost. And I was like, this is absolutely crazy. How did I just lose 6 figures and there's nobody who gives a shit anywhere? And there's nobody to help me. And there's nobody giving me guidance on what the next steps are in order to try to do anything about it. And this guy, meanwhile, has millions of dollars sipping on a coconut drink on a beach somewhere, and nobody's even going to try to go get him. And that's the real value here, whether they're doxed or not, is that injured investors have an advocate who actually knows what the next steps are and can provide some guidance and will criminally pursue people.
I love that.
Okay. So I have a couple questions, and then I have a scenario that I want us to try to explore. But El Chapo, you said earlier that you guys have a tiered system and a rating system, or a tier system based on ratings, but you don't list the country that the team is for. Am I correct in understanding that?
Yep, it's basically a 1 through 3 rating system based on country, but don't list the specific country. That's right.
Why don't you guys list the specific country that the team is from?
So I would say it's mostly based on our belief that there's value in anonymity and pseudonymity in this space. I think in a lot of ways, there's a reason why pseudonymity or anonymity in Web3 is a good thing. We're probably one of the only companies in the world that lists anonymity as one of our core values, uh, which is kind of a very odd one for a business. But in a lot of ways, anonymity brings the world closer to where we all hopefully want it to go, which is that we're valuing people on what they do and what they contribute, and not based on where they're from, what language they speak, what their skin tone looks like, whether they're fat or skinny, and that sort of thing. And I think everybody knows with terms like JEET in this space, and there's a general perception about Indian developers or Bangladesh or Pakistan or African or Nigerian, that people assign, there's a lot of bias in the space and in the world. And we don't think that it's fair that potentially with people who are coming to take accountability, that they're going to be judged based on their country and potentially have the performance of the project impacted by really doxing their nationality, or what country that they're from. We don't believe that that's fair. And I think what investors really need to know is not what country they're from, but rather what the law enforcement capabilities are in the area of the world that they live.
Yep, and I love that, specifically because I think, dude, I've seen some really cool projects launch out of one of the countries you just listed, launch out of Nigeria. And in the same vein, I've seen a ton of people that just refuse to touch anything that comes out of that, or even out of Africa. And I think you really miss the heart of crypto if that's the case. If you're going to block out a country just because, or even a handful of countries, right, or even a whole continent, just because maybe you perceive that they're more third world, or the projects coming out are going to be lower quality. Isn't the entire point, or one of the entire points of crypto and Web3, that people get new opportunities that they never would have had they just been stuck in a Web2 space, or just been stuck in a space with no internet, right? Like, Web3 itself provides so many opportunities, and I think, dude, you're missing out if you're gonna cut out entire countries, cut out entire communities, cut out entire groups of people. And I've seen that for sure with India. I've seen that for sure with multiple countries in Africa. I've seen that in like Southeast Asia. And some of the coolest projects that I've invested in or that I've followed along with came out of those countries. People just don't necessarily know that.
So I'm gonna play devil's advocate here for a second, just or for a bit, just because it's one, because it's fun, and two, because it makes for better conversation. Uh, can't you have a team from Nigeria or a team from India, uh, who have they're anon in a sense, where they've KYC'd on your end, but no one knows their identities. You're not going to be able to find them in these countries, but they have a good rating on your on whether they're listed on a share DeFi, or rather listed on Obsidian, but you also know what country they're from. So they're from Nigeria, for example, but they have a really high rating. Well, is that going to sway the average investor that much?
When you say that they have a high rating, do you mean, like, for us, Nigeria is in the number 3 tier, which is the worst on a scale of 1 to 3? They would have a number 3 country tier rating. Is that what you mean?
So this is where I'm confused, because you're saying that you don't want people to be biased based on the country the developers are from, but if the project has a low rating, or they're on a tier 3 rather, then people are going to be diverted from, or rather, people are going to be less likely to invest in that project regardless, right?
I would say yes, but I think that that's warranted given that there's a lack of actual recourse. What we didn't want to list specific countries. I think that there's a lot of tier 3 countries that are out there in the world. There's a lot of tier 2s, and there's a lot of tier 1s. I think the point is you deserve to know what kind of law enforcement capabilities in that country. That's just a reality. But I think there's a difference between knowing what kind of law enforcement capability it is in that country, and knowing whether it's from Nigeria or from Eastern Europe where scams are potentially present, or whether it's just a poor country in South America, or something like that. It doesn't really, I think that there's a lot of people in the world that would judge based on a specific country or a specific region in the world or ethnicity, versus just judge. I mean, what they should be judging it on is the law enforcement capability. That's an informed decision, because that actually impacts the value of what the service we provide gives them.
And I'll also add, for us, the angle we've taken on this exact issue isn't, we started off with tiers with our KYC and quickly moved away from them to a one-size-fits-all policy to ensure that we would be able to hold the individuals accountable. Because at the end of the day, this is a matter of rule of law and whether or not it is actually enforced in the specific area where these individuals live. And so where we are, where in this case, Assure is putting it in the hands of the individual to make that judgment call for themselves based off of their star structure, their three stars, two stars, 1 star. I apologize if I butchered that, Chapo. For us, when we speak with these individuals on calls ahead of ever going through the KYC process, we are making the judgment call on our side if we believe that we are able to hold them accountable in a worst case scenario and they're stealing funds. Because at the end of the day, KYC is it's a buzz phrase that can be used to manipulate. If you say, hey, I've been KYC'd, in the same way that you could say, hey, I just ate some food, right? It's an extremely general statement that requires you to ask more specific questions, like the example of food, what, right? What, and it's important to make sure that we're specific about what is actually going on in terms of policies and processes behind the scenes to ensure that everyone's getting the best experience and security in the space. It's about
with respect to security now, let's say a team is KYC'd and they're from a tier 1 country and everything looks good. You have the team wallets and you have their identities. How do you guys prevent people from the team from creating pseudo wallets and slowly soft rugging a project, which we've seen happen time and time again, where the core team of these projects is still around and still quote unquote building, but the chart has dropped, has like basically cratered to the core of the earth, and teams just putting out announcements every week saying, hey, we're building. I would love to know about how you guys are planning on tackling that.
You mean so what you're saying is you have a team, you've KYC'd them, and then they're creating their own secret wallets and siphoning off funds?
Yeah, I mean, it happens all the time. I'm just curious to know what are some ways that you guys what are some measures you guys are taking to prevent that? What are some thoughts you have?
Well, the way that we would prevent that is we do our best on the front end to KYC out every relevant member. So that if they start doing that, I mean, is usually a community member or somebody that notices it first before we do. And they come to us and say, hey, this is going on. We pass it to our investigations team. They look into it and they say, yes, that definitely looks like what they're doing. We reach out to the person that we have connection with the project. We say, hey, what's going on here? They either say, oh, I don't know about that, or oh my gosh, that's bad. What's going on? And then we do an investigation process, figure out what's going on, and then hold whoever is accountable after the investigation is complete. Which we're usually able to do, and a lot of times, actually, our goal isn't always just to hold them accountable. Our goal is usually actually just to recover the funds first and foremost. So if we can make some sort of deal where we can recover all the funds for investors and not necessarily have to hold that person accountable, that's ideal for us. And that might not be for everyone, but for us, our top priority is protecting investors, making sure they get their money back, which we were able to do that one time where we had a project rug. They stole the funds. We found the identity of this was before we're doing everyone's identity. We were able to get one team member to kind of rat out the other team member who they were. and then they actually returned more funds than they stole on accident. But the point was that as long as you have the relevant team members, it's not really an issue because you can always call them out and then get that figured out. And as long as you can deal with law enforcement, you're good. The problem is, I guess, if they're able to slip something past you and there's a hidden team member. A lot of times, we found early on that there was a team that was like 5 members, but it was actually just one dude that held all the multi-sigs himself. And so we actually go through and we actually make each team member. It's a lot more of a manual process, and it couldn't work on skill. And El Chapo's right about that. There's a lot of value in what he's saying, in that you do need to. There has to be something to solve the scale problem. But what we do for us is, because we just don't want to deal with a lot of the issues, is we'll go through and we make each member verify they actually have to go on and sign it while on camera to make sure that they're the person holding that wallet. And we verify that everyone is who they say they are ahead of time. It's a very manual process. There's got to be something better. Until we can find something better, that's what we do. But yeah. So as long as you're doing it decent, you should be able to hold them accountable. It's not really that big of an issue.
I think the slow look. I'll just speak to the process here. It's a great question. Scams and rugs in this space are a very large gray area. It would be nice if every scam looked and felt the exact same, and it was like a hard rug where they just pull the liquidity and the funds are gone. That's not the case. And you make a good point of slow rugs and some complex rugs, and they don't all look, feel, and smell the same. It's part of what makes our job to do right difficult. And what I'd say is every situation is sort of held in the same, or it's completed in the same way from a process standpoint. But when you say, how would you hold them accountable? I think it depends on what evidence you'd be able to generate and what really it was occurring. Just like Jesse said, the number one thing, or one of the biggest things we provide, is advocacy for investors. So, we've had success in using the threat of criminal pursuit and some of the evidence that we have that was done by either our in-house investigation team or community in negotiating and working with projects and advocating for investors. Even for some projects that planned on shutting the project down, we've even worked with teams to advocate for investors to make sure that, just like a real business, when you decide to close it down or shut it down, or like, hey, I'm done with this project, one of the biggest issues in the space is that instead of shutting it down and returning funds, like in the real world, if you decide, investors all invest in a particular company, and then you decide, I just can't do it anymore, I'm burnt out as a founder, I'm shutting it down. That happens all the time. That's not illegal. You're allowed to shut it down. You're not forced to continue to run the company. But if you do choose to shut it down and you've received investor funds to build a business, when you choose to shut it down, you are forced legally to liquidate all the assets and return them to investors. And so we've advocated for investors in how a project is shut down if that's the decision that's going to be made, because taking all the investor funds that you had received, deciding to shut the project down and not returning them in some way to the investors, that's not a legal option. That's fraud. And so we've made sure that we've tried to do what we can to creatively come up with technical solutions to return funds to investors, set up claim pools, things like that. And in cases where they truly are committing fraud, like if it is a slow rug, I think the biggest thing is slow rugs are still rugs. It's fraud. If you've taken funds and you've claimed that you are building something and you're not, then that's fraud. And so it's more about leveraging our ability to criminally pursue, where we have their contact information, obviously. And so we can go to them and say, here's the evidence that we have that there's a slow rug. If they say they're building in the background, we have every right to go ask them to show us proof of what they're building. And if they can't deliver it, that's when we proceed with the evidence package, what the conversations we've had, what they claim they were doing, the fund trail, the blockchain forensics. We'd put it all together and we'd use our legal resources to push it forward.
Well said. That's exactly right.
Yeah, definitely well said. And at the end of the day, you guys are doing the best that you can. I think that rugs and exploits are just going to get more sophisticated as KYC and security in the industry gets sophisticated. Eventually, you're going to push out most of it, and there'll be enough regulation and enough accountability in most countries where people will be at the very least coerced into doing these kinds of things. But I think that for now, even if KYC, I just want a disclaimer for the audience. Even if KYC is very good, and even if a project looks incredible from a fundamental perspective, and they have a high rating, there's just still so many ways to get around. There's still so many ways to get around things, and there's so many ways. I've seen it so many times with projects and developers and the team having these random pseudo wallets, maybe hundreds of them even sometimes, and then slowly just dumping tokens that were bought up at the inception of the project. So I
Yeah,
guess
it's tough to stay one step ahead of them, isn't it? And I think you're absolutely spot on though. The way to think about it is not a be all end all solution. Audits aren't either. You shouldn't ever look at a project and say it's audited, that means it's safe. No, you know. But it is part of the overall solution for a better environment for investor security and safety. And the actual process, just like auditing has gotten better over time, this process is getting better over time too. And it's people like us or companies like us that are trying to push it forward in a different way to at least make life more difficult for the fraudsters of the world.
So next question for me, and I'm going to open it up to panel member or audience members here in a bit, just to let people ask questions as well. But next question for me is, how are you guys distinguishing yourselves from competitors? I know it doesn't have to be a zero-sum game, and the goal is your goals are aligned, right? Making the space safer. But how are you guys distinguishing yourselves from competitors like Certec, Trail of Bit, Solid Proof, you name it, in this industry, and kind of capturing some of their potential client base?
I would say with us, we're not really trying to distinguish ourselves from competitors. That's not really our goal isn't, hey, how can we steal more market share? Our goal is just to make a better product and improve the space overall. And like I said, I actually gladly accept if somebody took over and made it a standard and just dominated the space, but made the space better. That would make me happy. It's at the end of the day, like this was started as sort of a passion project of like, we want to see this happen and we want to have a role in improving the space. And I think a lot of people are in the same boat where they want to see that. Maybe in the future, maybe we're all massive companies and that's more of a thing as stealing market share. But we don't really need to steal market share from other companies. We need to get the market on board with this concept because that's all the untapped market share, not the like crumbs of people that are currently doing it, but like the vast swath of all of crypto that should be doing this, if that makes sense.
Yeah, I think there's two aspects. There's grow the overall pie or grow your share of the pie. I think there's a reason why two competitors are on this industry panel right now. It's because the pie's pretty small. It's still not an industry standard. And so, although we started the educational journey here of bringing KYC to the space in early 2021, we are still on that journey and will be for a long time to come until it truly is viewed as an industry standard and something that people expect. You know, it's not an option, it's an expectation. And so I think for us, it's mostly about education. It's about educating people why it's important. It's about educating projects about why it's a good way for them to differentiate themselves and why it will ultimately help them with their credibility. And with respect to other competitors, the hope here is that if we do our jobs with being a legit, it's sort of like how is Certic differentiating themselves versus freecontractchecker.com. Eventually, people get educated enough to know that they aren't the same, and that there are high quality, providers in the space, and they provide better protection and better advocacy, and that's more valuable. And there's also cheap ones, which are better than nothing, but kind of buyer beware. Eventually, for us, it's less about talking trash on our competitors who don't do their job well and it's more about education. And if you ever see us talking about a low cost or a low quality provider, which there are plenty of them to use as examples, it's mostly to showcase what the differences are. And it's not so much putting them down, but it's to be used as an educational tool so people can really understand why, when we say all KYCs aren't created equal, give them some examples of what that really means in practice.
So I brought up SafeMoon Tony. He was part of the SafeMoon community space we held a couple weeks ago. And anyone else that wants to come up and ask these guys questions, they're masters of their craft, and it's been a great space so far. But I wanted to open up the floor to let people ask questions as well.
Beautiful.
Tony, go for it, man. You don't need to.
We're
raise
ready
your hand.
for you.
All right, thanks. Hey guys, I love this space. I love the conversations you guys are doing, what you're doing out here in the space of crypto. We do have a huge issue. You brought it up in, the 2021, there was a mass boom of scams, honeypots, rugs, even I experienced it with as we all did. People you would get smart with seeing it. They also evolved. What you guys are also doing is evolving with that, to defend us as investors against that. Very much love for you guys and respect for that. Please continue. I gave you all a follow. What you're talking about is a standard. I'm in a community that I'm not going to shill it, but I'm in a community that does that. It's called, I don't want to shill it, but we do have that. And you are right. There's different tiers of KYC. The community I'm in, they do it face to face. They face of the team, and they get. I'm not sure exactly because it's not public info of what KYC they do, but I do know they meet face to face, and that's brings investor confidence. I've also seen a different community that had 3 different tiers. One was a full doxed, one was a partial, and one was no doxed. So it gave investors knowledge of the risk management, and you also were right about even being KYC'd. It doesn't make anything for sure, because even in this community I'm in that has a full KYC, the stuff still happens. Like you said, like additional wallets are done, and community, they're siphoning money or whatever. There's still means of fraud to be found. Not so much a rug, but nefarious acts, right? So, and that's you're right, and that I was happy to hear that community, that you guys stay on top of it. You get a tip from a community member, and you guys look into it. I freaking love it. I'm going to be following you guys. I'm going to also be investing in the projects that you hold with understanding it's a safer investing. It's not 100% safe. So investors must realize that we still have to do do your own research. I'm very happy about this, and yeah, I gave you guys a follow. I'm very excited for what you guys are talking about. What you are doing is making the space better for us as investors. We're tired of these scams, guys. So thank you.
I would follow that up. You said I'm going to be investing in the projects that you've KYC'd, but I would actually like to say that I think that is a bad idea, and this is why. Just because a project's had a code audit or a project has had a KYC doesn't inherently make them a good investment. Those are 2 different things. A KYC is to show that they won't steal your money, but it might still be a horrible idea. It might still be an idea that's unsuccessful. It might be a swap that's not going to succeed. So I think as investors, we should always be doing due diligence. Like KYC code audit is a part of your due diligence process, but by no means should a KYC list be a list of good investments. This isn't a vetted list of like, hey, I've researched this. I believe this investment is going to do well. It is simply these people will have a lower likelihood of stealing your money. And if they do try to steal your money, we will hold them accountable. But their quality as an investment is a completely separate thing. And I just wanted to add that, because I know there's a lot of people that think similarly, but that's actually an investing mistake in my opinion.
I do think, though, sorry, I'm just going to say, I do think, though, using, one of the goals as a long-term vision that we have at Assure DeFi, though, is that investors are looking at Assure DeFi for projects that they should potentially think about investing in, right? So it's not you get the stamp, invest. It's that I think there's a million projects out there, and it's really tough for anybody out there who's thinking about investing to where do you get the lead? I'll say the lead list to even start doing your own research to think about which projects you might want to invest in. And I do think that looking at projects that are audited by top tier auditors, KYC, who have just gotten and taken accountability for what they're building, it's a pretty damn good way to filter out the noise and at least focus your research on projects that have taken accountability for what they're building and also have additional, kind of that verification and credibility to them. So I do think there's merit in there, but Jesse, you're 100% right. I mean, it's certainly not just carte blanche, go ahead and invest because they have it.
Well, and I think the other thing to keep in mind is just that I know we use the word project so often, right? It's a crypto project. Well, the reality is it's a startup. They're startup companies. We just have lingo that we use in Web3 that isn't used elsewhere. But when you invest in startup companies outside of Web3, 90% of them die, and it's a dead investment. And you kind of go into it recognizing that. And then of the ones that don't die, a portion of them don't really make you any money. You break even. And your goal is to find those few startups that are such good investments that it covers all the losses and makes you a bunch of money, right? Like thinking from an investor's perspective. And so you do have to recognize that crypto projects are just startups, right? They're brand new companies, a lot of times coming from people that have never built companies before. Maybe they're just really passionate, or maybe they're innovative. Maybe they don't know how to run a business. You don't really know. And so, yeah, I would say use KYC as one of the pieces of your research tool belt. We say all the time, do your own research, right? As you're doing your research, one of the things that you could be looking for is, are they KYC'd? Is it by a legitimate KYC company? Is it by a company that I can trust, right? That's the whole concept of KYC, is you're essentially loaning trust elsewhere. And so that's one piece to tick off the research box, because the reality is you could be the coolest project in the world and still fail. I had some projects that I've invested in even recently that I really, really liked the teams, that I really liked their concept, and they just didn't make it. And that's not because they were horrible. It's not because they rugged anyone. They just didn't make it, right? It's a failed company. That happens all the time in startups.
Yeah, let me add to that. I actually think a big way we solve security and a lot of these issues with rugs is just teaching people to do some sort of research. Most people don't. Most people are investing purely on emotion, purely on hype, purely because they saw it in the comments somewhere. They see a few buzzwords, they throw some money in. And if that's you, I want to challenge you to say that that's how you lose all your money. And even if you make some money short term, you will eventually lose all of it because you're not putting in the hard work. Investing is not easy. It is very hard work. And you're competing against the rest of the world who is also putting in really hard work. So if you're one of the people that's just kind of like, hey, I'm lazily investing on ideas that kind of sound cool, then you are the person that's going to have your money taken from you. And it's going to go to somebody who's like, hey, I am like diehard. Like I do my research. I understand it. I understand how the crypto space works. I understand what DeFi is. I understand what these terms mean. I know which ones are buzzwords and which ones are important, what the space needs, what the space doesn't need. Please, 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 if put in the work and to educate yourself and understand the space. That's what we need more than anything in the space is people who actually understand it and are putting and devoting money to things that are actually bettering the space and not trash projects that are in general, doing nothing for the space.
I'm going to respond to that. Yes, you're right. KYC is not your number one reason to invest. It's a part of the investing of doing your own research. You're very much correct. What I mean by I will invest is I still look at what the company is going to do, what utility they're going to bring, how strong is that team with innovation? Are they just launching a meme coin that's just for pump and dump? In my community, I've invested in they were doxed, fully doxed, and the team fell apart. The token went down. Nothing wrong. They didn't rug it or anything. It just fell apart. You're very much 100% right. Startup companies can either fail or succeed, and that's part of it of the investor doing their own research, and that's what I put towards my community is, you got to be smart investors here. You're right. KYC is not number one, but it is a good tool of safer investing for us, and that's what I appreciate from you guys.
Hey, D-Hype, go for it, man.
Yeah, Tony, I agree with you. The big thing that you just brought up, guys, which is really important, I think, to talk about, is that a lot of the motivation of especially the NFT space, but also just crypto, possible tokens and coins, is the FOMO mystery kind of hype stuff where like there's a lot of projects out there where people specifically are jazzed about it because there's not a lot of information. It's like that mystery of what could happen. It's like they kind of know how to dangle the carrot in front of people. If you think about relationships, even dating, whatever, people like a little bit of mystery and confidence. They want there to be some excitement and buzz, and it almost allows your imagination to run wild and the possibilities of like, this could go to the moon or whatever, right? Which is not how I personally like to operate at all. But I see so much of that working. Like my job, guys, like no one knows this, is that I help projects and companies market and build community, but try to do it in a way where we engage with excitement and with like hype, but off of things that are actually real, of like showing like, transparency, doxing, and building really good relationships. And I think what we've heard here today is that like, KYC, transparency is a really good part of the equation. There might be some reasons that people do want to be anonymous, of course, in the world, like we covered earlier, of benefits of being more objective towards like projects and people and things like that, of that nature. So I understand how some people might want to be anonymous, but I'm a huge person on doxing, and you guys, well, I forgot who it was, we talked about talking face to face. And some of my friends who run projects, NFT projects, that's what they do. When they onboard you into their NFT project, they literally have sit down Zoom meetings with you. And these are people that I know from being at conferences and stuff. My big thing is like going to conferences, meeting people in person, shaking their hands, like the old school way of building relationships. And I feel like, it takes a combination of all these things, like we just mentioned, like Tony, to do like so much due diligence. Like you really do have to work hard. I personally have been rugged, and I also have had my wallet hacked, and like, a crazy amount of wealth of NFTs and stolen from me. And it feels like it's almost like a rite of passage. Once you get your wallet drained, everyone's like, okay, now you're officially like an NFT degen or whatever, right? And I think we need to change that. We need to change the landscape of, and I don't know if my wallet was hacked off of a link or like a Wi-Fi situation at a conference. There's so much, you could be at a conference talking to people and thinking that you're making these best buddies, and they could be on, their laptop, like hacking into your phone possibly, right? Because they know there's going to be people there that have deep bags at the conference. And so we need to be really, it's one of those things where you need to really develop relationships with people, but also keep people at a little bit of a distance, to that you don't really know them that well. And I think we have a problem where people just ape in. They go into a project. They like the mystery, Noah. You know what I'm saying? They almost like that adrenaline or excitement of like anything could
I
happen. It's
think
like almost
I
like a
think there's a
gambling
difference.
mentality.
I totally get what you're saying, and there's been a lot of things that have been written even about the NFT space specifically, and this hype cycle, and a lot of it is related to keeping an element of mystery, and how the performance of tokens and floor prices are always better before the announcement, right? It's the same thing: buy the rumor, sell the news. It's been that way forever, and there's a difference though between an element of mystery about the roadmap and what's coming, and an element of mystery of whether we know who the guy is who owns the millions of dollars and holds the keys to the castle and has all of our futures in his hands. That's not the element of mystery, I think, that is what should be building hype cycles. And at least from what I've seen, I don't see not being doxxed and being held accountable as something that people are bullish on. I think in general, our business for the last 2 years has been based on the fact that investors want to see accountability and an increase in the amount of transparency there is with at least who's involved, and that they have some advocate behind it. But when it comes to marketing, I agree. I think 100%. It's good to hear somebody who's in that hype world say that you're such a fan of doxing and that you're not like somebody who says, I actually like using doxing as part of the hype cycle, and that you're going to say, the element of mystery or not being doxed or not being held accountable is viewed as a bullish thing. I don't know. I view them very separately. I agree with a lot of things you're saying about hype in general.
Yeah, I know that's a good thing to have that nuance, because I wanted to kind of get to that point of thank you for bringing that up. Um, that just in general terms, the idea of the mystery, the hype, and everything, right? Like where people sell on news and everything. Once you actually make the announcement or show your roadmap or whatever it is, that's when people go like, "Oh, I should sell," either because maybe they don't like the roadmap that much, or they're like, "Oh, it's going to be hype now, so I should sell while it's high." And there's this whole weird mentality of like the gambling gamification, constant like day trading mentality or whatever. And my answer to everything is always like to tell people to think long term. Yeah, I'm literally became called Doug Hype. Not I didn't call myself that. Because I created this brand called Hype TV to talk about crypto and to like really like connect with people and interview people, and then like also help like promote projects in an authentic way. But like my background's in the entertainment world and advertising and the arts. And the thing is that like in reality, telling the story like we're doing in Twitter Spaces, talking here, telling the story and really the message of a person or a brand is so important. Most people just don't do a very good job of it. And having mystery and unknowing about something lets people like hold on to an idea or a thought or create it in their own head. And you can do that in different ways while still being doxxed. But that's the thing, is that like we need to explore more of the psychology of what's happening with trading, buying, selling, and what's going on, because it's just a funny process that almost works against us now, right? Like when Elon goes on Saturday Night Live and all of a sudden Doge tanks when everyone thought it was going to boom, because our consciousness has reached that thing to jump a step ahead, and we keep doing that. So now people, I know personally, projects that literally were built off of just not knowing barely anything about the road ahead, and were like the founders were anonymous, and they're still hoping like that the founders will dox themselves, where like it's almost like a part of the roadmap where like if we get to this point we'll dox ourselves, so they're using it as like a bait also, you know what I mean? Like, so it's like this game that people play. But I'm on the side of like, I'm the serious hype man where I'll get excited about stuff, and I've talked in this space about it before, but I want to know everybody around me. I want to be at the conferences and shake people's hands and get to know them and do business with people that I really enjoy and trust. And which is the opposite of the anonymous person that's kind of like, in a third world country like Nigeria, wanting to keep that anonymous thing. And we brought up that fact that like sometimes you even need to know what tier system country they're from because you want to be safe. It's a difficult situation, but my answer to everything is always like you can use challenging situations to stand out, right? If you're from a third world country, or you're from a situation that's different, use it to stand out and be the exception to the rule, and be the person that says like, hey, we're going to be the ones that are safe, and we're going to be the ones that show people how to do that. Which I think that people in the room right now, in some way, you're doing that, where you're taking a situation that's a challenge and you're turning it on its head, and you're saying like, we can figure out a way to be more safe in the crypto space. And that can change how people think about situations. And I really hope that I can go to family members and people like on Christmas and Thanksgiving and be like, hey, maybe you should check out crypto. Because right now, when I talk to them, they're very leery and they're very sketchy, because all the information they get is from the general media, right? So we need to figure out a way to make it so people feel more comfortable coming into Web3, I think.
Well, I was going to jump in on one of the things you said way earlier, which is you're worried about going to conferences, getting your phone hacked. The reality is, if you hold any sort of significant amount of money in crypto, you should definitely have that on a hardware wallet, not on your phone. A lot of people don't realize that they don't write down their seeds. They lose their phone. They lose all their money. It's not, you can even hold a lot of these funds on like a multi-sig if you want. I know a lot of people have NFTs. They'll hold it on a multi-sig. They won't even hold it, not even in a cold hardware wallet, but they'll have like it held between multiple hardware wallets. So In my opinion, if you're holding more than $500 in crypto, or maybe 1,000, get a hardware wallet. Keep it safe. Do not keep it on your phone. That's how you lose all your money. Yeah, my 2 cents.
Yeah, I got a ledger right away when that happened, and I thought that I was like pretty safe and like smart and whatever. I was using a burner wallet, but that didn't really, I don't really want to get into all the technical details of that. But my point is that I thought I was being pretty safe, but apparently I was not. And also the multi-sig feature, people should be aware of that. You can get a multi-sig wallet, so someone can't just steal one wallet or one login or seed phrase and get in there. Um, I think that's really important for people to realize and think about, like, the value that they have, not just in the amount of monetary wise of what's in their wallets, but the time that they spent acquiring these things, the communities that they're in. Because the first thought I had in my head when I had my wallet drained was not I lost, like, whatever figures amount of money or value versus or worth of coins in crypto, but the communities I was in. I was a leader in a lot of these communities, right? And running like giant trade groups that had like big Twitter spaces full of hundreds of people and stuff. And and then all of a sudden I didn't own any of those things anymore, right? So I didn't feel like it was like I felt part of those communities because I had invested in them in multiple ways of like my time, my money, all that stuff, right? And I just felt the sinking feeling and I felt terrible when people were like, Doug, why aren't you more upset that you lost all this stuff? And I'm like, I don't think you get it. It's not so much just the monetary part of crypto and NFTs. It's that you're part of things and you're a leader and people look to you because you're investing your time, energy in multiple things. And I think that's part of the reason that we look at different people in a different light in the space too. Like this space right here, the Aquarium, I really love it. And I talk to Noah about this all the time because of the type of people that are attracted, the type of mentality here and atmosphere. It feels very genuine and authentic, and I really like it a lot. And people need to also think about that. That's why I think doxing, for me personally, is very important for founders and many people in the space, because you can then really get to know them really like on a certain level. And I mean, I've had people hire me for projects, call me immediately and have amazing phone conversations. Like the first point of contact I had with them was just absolutely fantastic. And it led to like really amazing things, people that really care about their community and like people that really care about other people. And I could feel that in the way they approach me, the way they talk to me, all this stuff, right? So, you know, social aspects of things really still do count. Um, and I think it's really important to have spaces like this so people, there's this room full of people here right now, right? We've got 207 people in the room. This room can get full of people. And it's great because there's so many people in this room. If I go through, a lot of these people don't like follow me. I don't know them. And it's like new people maybe from around the space or coming into the space that can learn so much from a Twitter space like this. And I think it's a very valuable time that they spend to learn about this. If I had known all this stuff day one when I came into the NFT landscape, I probably would have fared like a lot better. So I really appreciate what you guys are all doing here and having the space, Noah, because I think relationship building and really taking the long term approach to all this of like how you think about success is the number one factor to whether you're going to be in a good safe situation or not. Your kind of critical thinking, if that makes sense.
I think all great points. I think there's a couple important pieces that I want to comment on real quick here, just about security in the space as a whole, which is where the conversation has led to. If if you have been here for a long time, you'll realize how far we've come. And I made this comment before about how different this KYC industry is than it just was a year ago. But when you look at security as a whole and how much investors are protected and what infrastructure is in place and what's available and that sort of thing, boy, have we come a long way in the 6 years that I've personally been live in front of the show watching. And we're gonna continue to make progress there. We had the opportunity to present at an FBI conference in the fall, and the title of the presentation that we gave was a modern approach to blockchain security. And we made the comparison between kind of traditional security. This is outside of the crypto space, but like home security. And when you look, 500 years ago and how that's developed from 500 years ago to the way that we secure our homes today, it used to be very much like physical defense. Like people built walls, people built barriers, they put barbed wire fences up, they had sentry towers, you defended it with weapons, you locked your doors, you had big barricades, they put moats outside the castle. It was all to prevent bad things from happening. You didn't want to let people inside the castle. Now, flash forward today, and people don't have moats or sentry towers. In a lot of places, you don't even lock your door. But almost everywhere, it's safer than it used to be, even though it's not hard to get inside the house anymore. They're not they're not strong locks. There's windows everywhere. But what there is there are security systems now, and there are consequences if somebody enters your house. And that's really, when you look at modern security and what's needed in the crypto space, that's actually more effective and more powerful than all the physical defense. And I think when you think about that type of comparison and look at what's happened in the crypto space up till this point, where companies like Obsidian Council and Assure DeFi are focusing on the accountability path and the consequences versus actually trying to stop the bad acts from happening. It's all been focused around that almost physical defense. Like a code audit is a physical defense so that exploits can't happen or hacks, and that code manipulation can't occur. And liquidity locking is a infrastructure that gets put in place so that liquidity can't be pulled. And cyber pen testing is done so that you can't have outside penetration from from a bad actor. And team token vesting platforms were created so that you can't have teams who have large allocations just dump on the public. And these are things to prevent bad things from happening, which are all very good and they're needed. And it doesn't mean now that we have no locks and we have no walls and we have no physical defense. But when you look at a real modern security system for something like a maximum security prison, it's a combination of both physical defense and a path of accountability where there's digital security systems and that sort of thing. And the real widespread and what actually really drives people not continually coming into strangers' houses and robbing and looting, and what really prevents that from happening now today in a modern society is the fact that there's adequate law enforcement in most areas to prevent it. And there's accountability paths that are created through security systems and law enforcement. And that deterrence or the fear of consequences is what prevents people from actually coming into the house now, not the physical defense. And that's the transition that I see as the future of this space over the course of the next 10 years, as regulators step in, as requirements become stronger, as investors demand different and more stringent type of verification processes, and as companies like Assure DeFi and like Obsidian Council, as we progress and we build even stronger relationships with law enforcement and people start seeing the consequences of rugging, and people really start being held accountable through these processes that we're putting in place, that's when we're going to see real meaningful change, because people will no longer feel like they can go rug somebody for $2 million and go live on the island. They've got to be looking over their shoulder for the rest of their life, just like if they committed a crime, in the real world with fiat dollars. And so I'll just say that's the future that I see. And I think it's kind of a good comparison to think about how it takes time for security systems to develop. And this is still a very nascent space and we've got a long way to grow, but we have come we've come a long way in the 6 years I've seen it too. So it's exciting to think about where we'll be in another 6.
Right. I love that.
I want to interject. I'm the person who posted a picture of the Queen who passed away last fall. I'm a teacher of financial literacy in my county school system. I'm also a former banking executive with a board sitting member for the New York Trade Reserve, and I've had contact with the Miami Reserve as a climate relativity theorist. Um, as NFTs gain more notoriety in spaces, there'll be old dogs like myself who actually come from the trading floors of different banks that will present things like this in spaces for discussion. As I look to the future, my expectations from the financial world are for the currencies that we pass and trade and barter amongst us to match the God Save the King that's being sung today in Britain. So by this summer, with all our World Economic Forums flights with people discussing the burning of fuel and the 2 hour commute from Davos, as we look at the aerospace industry, I'm just going to push a little delta with the Twitter space that's provided and predict that we're going to see dollar bills that have the king on it. And that's my 2 cents worth that I wanted to contribute to the group. And thank you. Have a great day.
Yeah, thank you for sharing. Have a great day.
As far as what Chapo was saying, I had one quick thought, and I appreciated the delta there. But what really the most important part about what he said for me is that what we're proposing, this idea of KYC, he brought up a really great idea about how there are physical security systems that are in place, and then there are accountability systems in place that facilitate a safer quality of life for us as individuals. I'm speaking specifically about here in the US. Now, the reason why I feel more comfortable leaving my house unlocked at night, if I do that, it's because I know that it's less likely that individuals will want to even check if my door is unlocked, because there are consequences to those actions. And that's very well said. And a thought that occurred to me while I was speaking about that is, in this space, it's almost like a new nation is forming in a lot of ways, where this decentralized space that we all interact in, that is on a global scale, where we are putting into place, specifically with KYC, the accountability enforcement aspect of allowing individuals to feel safer, and the whole idea of, at this point in time, from what I perceive, individuals, as far as individuals that run projects, need to choose what accountability standard they're willing to hold themselves to at the end of the day. And if we look at KYC through the lens of how accountable is that person willing to be, it makes it a lot easier to see the value in the KYC. And a part of getting the answer to how accountable they're willing to be is based off of the track record in the past of what the KYC has done, the KYC provider has done as far as holding projects accountable, and the processes and systems they put in place to effectively do that into the future. So a little gold nugget there that I wanted to pull out from what Chapo said.
I love that mentality. I mean, just imagine, I think where we all wanted to go here on the panel is, imagine if investors asked themselves that question before they gave a project founder money. How accountable is this? I'm about to give this guy, potentially thousands of dollars. How accountable is he willing to be for that money? We're the ones that can basically answer that question, or by going through this process, that is what we're doing. And I think it's an awesome way of thinking about it. But we've got to get to that point, because right now there's an expectation that there is no accountability. And that really is the problem that we're both, we're trying to solve in this space, is an increased level of accountability and some way of determining that about how accountable somebody's willing to be. So I love that.
Thank you.
Safe Moon Tony, go for it.
Okay, guys, so I have a question. All right, so please explain to me. All right, so your company, what you do is you KYC and you docs. Is it that you have your own project? Do projects go through you to launch for credibility to investors for KYC? I mean, please A lot of my community's in here, and I'd like to know more about your company. What is it that how you out here? You know?
Yeah, good question. I think there's different service providers out there that are structured differently. Ours is pretty easy. We're structured very much again like a code auditor. We're a service for a fee business in the space. Projects pay us in order to verify them. We have some relationships with platforms also, and they'll cover the cost for verification because they want to keep fraud off their platform. But generally, we created a win-win value proposition for projects where by verifying with us, they're going to gain credibility. It's going to be easier to get investment. We do some marketing and promotional type services for our clients that are verified to showcase the fact that they've been verified, which helps them and get them in front of our community. And so that's the model for us. We're a business. We're a legally registered business in the United States. And it's just a service, a pretty simple service for a fee business.
Ours works.
And I would add,
I was going to say ours works exactly the same way.
with the addition of how I usually describe it as we're bridging the trust gap that naturally exists between project owners and community members due to the high amount of fraud in the space. That is the value proposition that we're fulfilling for members of communities and these project owners. And that's why they want to subscribe to these higher accountability standards, is so that they can gain the trust that will accompany that.
Yeah, and just tying back that question, Tony, just tying back to I think it was Hype earlier that was talking about the difference between wanting to be doxxed and wanting to remain anonymous, and the anonymity is so important in the crypto space. I think the reality is, as an investor, everyone deserves to remain anonymous. That's the key component that's been there from the start, right? But if I'm asking you to give me tens of thousands or hundreds of thousands or millions or hundreds of millions of your dollars, I think there's like a certain level of accountability that should be there. I don't think that you inherently deserve anonymity when you're managing millions of dollars of other people's money. And so I think that's where the value of KYC comes in, is recognizing that if I want to utilize investors' money to go create something, there needs to be some form of trust, some form of accountability, some form of ability to keep me in check if I do wrong by you. And so that's where KYC comes in, and that's like the key component that we're talking about today. I know Assure does a few more things, and we do a handful of other things outside of just KYC. But yeah, I mean that's the idea of KYC. We don't have a token. We are a company with our goal of generally just saying, how can we increase the general quality standard in crypto? We can do that by removing a ton of the rugs or holding.
That's perfect. Hope I'm not stepping on you. Are you still talking?
I think you might have cut out there.
Shoot, yeah,
sure.
Someone called me. I was in the middle of my, but no, that's our thought, is let's increase the quality standard. And one of the ways we do that is by reducing the number of rugs, by lowering the likelihood of fraud. And that's what KYC is all about.
Perfect. Yeah, because what we have out here is a huge problem with devs that are not doxxed, and they bounce around from project to project, and they're just opening these things, rugging them, and just causing havoc out here to investors. A lot of new investors do not understand what KYC is. Know your customer, know your the team members on the dev team. This is very important. That what you guys are doing, and it is it's expected of me now. I don't just jump into a project, for hype. If I do this, I'm throwing 20 at it, But if I really want to invest in it, I want to know who they are. And in my community, the standard that they do with doxing, face to face, there's some projects that don't want to be doxed to the community, but they are doxed to the main token that they're being listed on the swap. So that's important too, because for me, it's like, okay, I trust the team I'm invested in, that they're doxing to these, this new token that's going to be on the swap. So I will invest in it because they are doxed to the team to a high standard. So that's very important. But I love what you guys are doing. Yeah, this is before the regulation comes for government, because we all know it's coming. You guys are setting the standard, and it's where a lot of these other communities I'm starting to see, and a lot of new investors need to understand there's more than just investing. You got to do your own research. KYC is a big part of it, not all of it.
Yeah, and that's part of the idea, right? We've asked that question of like, shoot, if we remain in the low standard space that we existed in for, I think we're getting better. When I say we, I mean crypto as a whole. But if we were constantly staying where we were in 2020, regulation's not just going to come, it's going to come in hard. And so if we can, as a space, learn to self-regulate ourselves, and I think that's not just, hey, can we, as KYC companies, KYC everyone we can get our hands on, really that's, hey, can we, as a communal space, every investor, every company, every project, can we demand a higher standard? Can we just ask that projects show up in a professional manner and actually honor the investors that they're taking money from to go create things? And that's the whole idea, right? Is self-regulation.
Hype.
Yeah, I think it's important to think about this. I bring this up a lot. This topic of like, what is someone's motivation or their intention? And when you're thinking about security, KYC, investing in something, you got to think about like, why does somebody want to be anonymous, or why does somebody want to be doxxed? And talking about the difference between investors and the project you're investing in. Like when you're an investor and you want to be anonymous, nobody's really like potentially losing out from that, right? Like you can be anonymous and just invest, and like, that's, it's kind of like a little bit of a one-way street. But when you have other people's securities in your wallet, whether, whatever, crypto or whatever it is, there's different motivation there that you could possibly have. Like, your motivation obviously as a person is always probably to be having some benefit, whether it's monetary or some other benefit. But the thing is that we have to look for people to see that their motivation is for long-term success with the community and with the people that are investing in them. And usually you can kind of see that in the actions that they take and the things that they do, thinking that long-term process. And then there's steps they can take, like the KYC here, and there's steps they can take to show like, hey, this is what's important to me. It's important for me to like have the long-term success. And a big topic is a lot of people will say, that like my job as a leader is to be there for the community. Like I'm almost an employee of the community. The people that are investing in me and in my project, my number one priority is them and the people. And we actually, one of the shows I help co-host is a show where people come on, they show their NFT projects, and if whoever gets voted in the show gets like their floor swept and all these nice things happen, and it's cool. It's like they're investing in projects that they believe in and think are doing really great stuff, especially for the community. And one of my buddies, Didi, he said, if you invest in the people and grow the people, the project will do well. Don't invest in the project, invest in the people. And I thought that was like a freaking fantastic way to explain a way of thinking, because like in his NFT project, he finds all these people in his community to help work on the project and help grow the project. And it's all about those people and in that process. And then the project grows because all those people then therefore are more invested in the project, and it feels good. It looks good. It's about the people involved in the project. So, for me, I see a lot of people getting into crypto where they're here just to flip some stuff and make some quick cash or do whatever and just take advantage of opportunities. And they look even at, all the people around them as exit liquidity and stuff, right? But if we shift the mentality to we're investing in people in situations that are good for people in the community, I think that's a really important thing, because that if I started to really think about this stuff, once I had my wallet stolen, like what is it that what is the motivation, and why do I really care about these communities that, the NFTs were stolen on my wallet? And I was more concerned about my connection with the community and the people than the actual monetary value, right? And so those are things I think people should think about, especially in this space. While we're looking down here, there's a lot of people here that have NFTs as their PFPs, but there's a lot of people that do not. And there might be people that are just kind of like learning the space, or maybe they're like not NFT centric or like super delving into it hardcore. But I think this is a great opportunity for us to learn from it of how, and also the security aspect that you talked about of, you know, having repercussions later, or a police force or whatever it is to enforce laws. That is also another community aspect where the community itself is trying to enforce laws um, and to do things in order to like regulate things and you know, fix things later, so you feel more safe and you don't have to have that conflict right away, right? So it really feels like community is like the answer to so many of the issues, and getting and building those relationships. And and you know, I know it's a vague thing, but think about people's motivation and what they're really wanting out of the situation in the project. I think is number one.
Tony.
Can you guys please tell me the name of your company? Because I'm getting a little lost in your profiles. The name of your company and when it was established. Are you guys together as in who's the dev and who isn't? And how'd you come about this project? Like, how'd you start all this for us as investors?
Matt, do you want to take that?
Yeah. Well, I mean, Chapo is from Assure DeFi. We are from Obsidian Council. If you missed the beginning, I mean, we came about
Obsidian
it.
Council Obsidian Council is the name of our Twitter account. It's kind of extremely confusing, but that is not the name of our company. Our company is Obsidian Fi. Obsidian Council is like a whole separate thing. It's like the original group that we launched it out of, but it's not the. Those are two different things.
Right. Yep. That's where I was going. Is that Obsidian Council was kind of the basis for where we began, going back to what Hype was saying, talking about community. We started as a community that was just tired of getting rugged, and so Obsidian Fi and the whole world of our business and KYCing projects, and we've gone a lot further than that. KYC, like I've said, is an important part of what we do. Another thing, just tying back to what you were saying a minute ago, Tony, is what is called our talent by Obsidian, or Web3 talent by Obsidian. And there, that idea of devs that are running around from project to project and slowly rugging them. What we do over at Talent by Obsidian is we vet and verify both the skill level and the claims and the resumes, as well as the identities of individual devs or individual talent, whether they're community managers or marketers or developers, whether that's contract or whatever. Tons of different types of talent, anyone that can work in Web3. And we verify and vet their skills and their identities, and then connect them to legitimate projects and good projects that are looking for those, whatever that talent is, if that makes sense. We do investigations by Obsidian. Taylor referenced that earlier. It started as our means of holding projects that rug accountable. I saw some tweets in the comments saying, hey, have you guys ever had any verified or any KYC projects rug? Yeah, we have. And that's where investigations came in. Just this idea of like, okay, let's sort it all out. Let's figure everything out. We've unrugged projects and gotten the money back and given it back to investors. We now investigate projects that we're not even associated with if we get hired on for that. And that's just the idea of essentially an audit that's more than just code and more than just their contract, but auditing their finances, following everything on the sleuthy blockchain trail, tracking everything down and figuring out who the bad guys are, trying to play Batman, I guess. We do a bunch of other stuff. Taylor, is there anything that I'm missing there?
I'd say it's a good overview. To summarize it, we're a community that we're based in our community, but we're a security company that sells services to project owners in the Web3 space that benefit them and the members of their community consequently.
Yeah, and I guess I'm the other piece of the panel up here. Chapo from Assure DeFi, and we're a KYC crypto verification or crypto founder verification provider. So those are the two different providers. We have Obsidian and Assure DeFi. I'm the other half, but it's just me up here. They brought 3 people to the party.
Yeah,
we want to outnumber
tried
him.
to show up.
Yeah.
My
Guys,
team's busy getting real work done out there, guys. You know, so I'm just kidding.
That's too funny.
Guys, it's been a different but informative space, and I've really enjoyed learning about the different ways you guys are innovating the KYC process. We still have a long way to go as an industry as far as rooting out all the scams and the rugs and the schemes. I'm not even sure if we'll fully be able to eradicate them. I mean, we still have them in the traditional financial world. So, but I suppose I'd say put one foot over the other and just keep going. You guys are making strides. Obviously, your track record speaks for itself. I think this is a good place to kind of wrap things up. But before I do, are there any closing thoughts that you guys want to share, either from the Obsidian or the Assure, or Obsidian or the Assure DeFi team?
I'll share a couple thoughts real quick. The biggest thing that I hope that people can take away from this, as someone that thinks about security a lot and preventing and reducing the amount of fraud that occurs in the crypto space, is at the end of the day, no matter what systems are implemented, as far as tying back to Chapa's example of a castle and the idea of physical protections in the real world, but also the accountability systems that have been put in place, such as law enforcement, which we see in our day-to-day life. As those systems are continuing to be built in this space, um, something that everyone has to understand is that people are complicated, and you can't make decisions for other people. That's a Captain Obvious statement. There's a reason why crime still exists in the Web 2 space, in our day-to-day lives, and why those systems are there. They're used as guide rails, right? The bumpers at the bowling alley, as a way to keep people in line and in check. But there will always be gutter balls. There's going to be people that are going to go outside of the bounds for their own gain, and that is a part of just being a human. And so it's important to remember that as strides are made towards improving the security of the space and reducing the incentives for individuals to want to step out of bounds, that there's also that human element and that human factor that can't be coded out of us. It can't be audited, um, and ultimately, in the same way that you're going to take care to stay away from individuals in your real life or in normie land, as I've heard it said. I think it's kind of funny. In normie land, that may be unsavory characters, you should use that same judgment when you're looking at Surfer Boy 9000, and he's talking about his incredibly cool reflection token. Think, use those skills that you've more than likely developed if you've survived up to this point, to discern for yourself individuals that you want to support with your funds, so that at the end of the day, you're going to end up in a place where you'd like to be, and you can hit the goals that you're looking to hit. And understand that the systems will continue to improve, and as they improve, our hope and invitation is that your internal decision making systems can improve and grow as well. And that's ultimately done through taking personal responsibility for your understanding of the space, education of security, and being involved in stuff like this.
Yeah, I'll just close by saying I think the biggest thing that we all need to do is help with the education. It goes beyond just KYC, but I think everybody here sort of has a responsibility now that you've taken the time to understand what this process is and what value it provides and why it's good for you as an investor and how it can benefit projects and communities that you're a part of, and how it'll ultimately help drive this space forward to where we all want to see it go over the years. You now have a responsibility to be part of that and to support projects getting KYC'd and start demanding it as investors, and have you people who you speak with who are influential in the space, make sure they understand and help educate them also This is one spaces, but there's a huge network effect in Web3. And if 200 people each talk to 200 people again on a different space, we end up reaching 40,000 people, and that exponential network effect of education around the world about this concept and why it's needed and why it makes sense and why it has value, and helping people understand that all KYCs are not created equal, and understanding a little bit about what a real KYC is and what components those have. I think that's the biggest ask probably Obsidian has, and that Assured DeFi has too. And we both have that same goal of just seeing it become a standard in the space, because it's logical. It makes sense. People who are accepting funds and are promising to build something on behalf of it, investors, they have a fiduciary responsibility to the people that they're accepting hundreds of thousands or millions of dollars from. And I think everybody knows that we need more accountability in the space. This is one way that we can deliver it. And until it becomes a standard, this space can't continue to grow. Fraud is holding this space back. And people who aren't currently contributing to the space and people who aren't participating in it, largely it's because of the way that they view it being the Wild West, and so so I'll just say filled with fraud and scams, and so difficult and complicated to navigate, that they don't ever want to jump in. And if we want to succeed as investors, and if we just want to see the space continue to grow at the pace that it is, we have to solve this problem. And it's not just the companies who are doing it. Again, it's the communities. You guys are part of that solution and that educational path. So I just ask that you guys take what you've heard and learned today and apply it. And when you're looking at potentially investing, encourage people to get KYC'd, encourage them to work with legitimate providers. And that would be the thing that I think would help everyone here the most. So I appreciate you guys hosting. It's been a good one. It's been a little bit longer than I was originally expecting, but it was awesome to get on here with Obsidian. I thank you guys for being a part of it too, and for what you've done to try to figure this out as one of the leaders in this industry like Assured DeFi. So really appreciate the opportunity to be here, guys.
Thanks, Ten.
Yeah, no doubt. I appreciate you guys being here. D-Hype, did you have some closing thoughts? And then we're gonna wrap things up and close it out.
Yeah, thanks, Noah. I just kind of want to summarize the space as saying, like, thank you to everyone here. This kind of space is really highly valuable. Part of my mantra is I want to make, valuable things like sexy and attractive, right? And in the sense of like, danger and intrigue and mystery and all the FOMO is usually attractive to people. It's like sexy to them because they're like, oh, anything could happen. But safety and building community and relationships is actually really attractive. That's what really gets you somewhere in life. So I think my advice is for everyone in the room to make sure you're following the people, especially the speakers up here, other people in the room. I see there's other people in the room. I'm looking at their profiles that have security type things in there, or safety measure type maybe projects, things like that. And always think of yourself, what's the next step I can take? Like, can I DM people? Can I like make some new friendships and relationships? Can I follow their accounts, join their community? Like that, when I first joined Twitter Spaces and it was like really hyper crazy and everyone's trying to figure it out, people used to follow each other like crazy and go like, oh, I better follow these people. Now it's kind of slowed down. Maybe it's because people are worried. Maybe they're more safety conscious of who they follow. That might be a good thing, But reach out to people, look at their profiles, have conversations with them, check out different communities, go in there, go into Discords, talk to people, but also be sure that you're very safe, that you're not doing anything like clicking on links or going down some rabbit hole that might seem like sketchy, right? But my number one thing always is like follow people in the room. Check out what they're doing. Send some DMs. Like I've DM'd a bunch of people on the panel here. It's my way to just like build relationships and show appreciation and say thank you for what you're doing. And you never know what could turn out from those steps that you take. And so that's really my closing thought is take advantage of a really high quality space like this and make sure to follow people and build those relationships. This is what Web3 is really about, is the strength of community and intellect coming to fruition and creating really cool stuff. So thanks so much, Noah. Thanks everyone around the panel here. It's been a really cool time.
Yeah, thank you all for being here. And Whale Coin Talk community, thank you for joining. This was a shorter episode of the Aquarium, but quite an informative one, and an important discussion to have. Remember, everything you hear on these broadcasts